Morning, guys. Happy Friday. It's April 25th, 5:29 a.m. Central Time. Grain markets are higher across the board. Brian Split is here wearing a very nice, is that a sweatshirt or a sweater, Brian?
It's both.
Hybrid?
Hybrid, yeah. It's a hoodie that's like a sweater.
Very nice. You're looking sharp as always.
Thanks,
We've got
buddy.
some big news out of China overnight. Let's start there.
So China may exempt some U.S. goods from tariffs. Beijing has granted exemptions on some U.S. imports and is asking its businesses to help identify goods that may be eligible. A task force led by the Ministry of Commerce is working to compile a list of 131 categories of products rumored to be considered for tariff exemption circulated on Chinese social media overnight. The Commerce Ministry, however, has not commented on the matter. Both Bloomberg and Reuters ran similar reports overnight, citing unnamed sources. This is perhaps the clearest signal to date that China is concerned about the trade war and its economic impact.
So this is it, Brian. After a few weeks, China blinks.
I don't know. There's a lot of blinking going on in both
Seems that way.
directions, I think. But I think that was the whole point, is to cause discomfort and have one side be like, you know what, I really don't like that I'm paying this much for this, and let's figure something out. And we're probably going to see some more back and forth of those conversations. I think that's the whole reason that President Trump is doing what he's doing, right?
They're making a list. They're checking it twice. I saw a couple different versions of this supposed list on social media. Soybeans were not included. I don't know if that matters, though. I think that this is just more of a big picture sentiment type thing. It almost feels like, given the price action that we saw yesterday, maybe somebody knew about this. Maybe somebody was ahead of this. Does that make any sense to you?
Yeah, there was definitely a lot of buying in soybean oil, really leading it. Soybeans, I think there was some chatter that maybe there was some kind of RVO announcement that somebody knew was going to be coming, but nothing.
That's what I heard.
Yeah,
I heard that the market in soybean oil, especially, they're trading the idea of a forthcoming announcement regarding RVOs. I don't know. So anyways, this is considered to be good news. Let's go to soybean price action, which is perhaps related.
So soybean futures closed higher for a fourth consecutive session on Thursday. The July 25 contract gained nearly 12 cents to settle at $10.62 per bushel, its highest level since late February. The rally was fueled by expectations of increased demand from countries outside China, as well as growing optimism over a potential easing of trade tensions with China. As part of ongoing trade negotiations, Japan is reportedly considering an increase in U.S. soybean imports. However, the USDA is projecting Japan's soybean imports at just 3.5 million metric tons this year. A rise in soybean oil futures also supported soybean prices.
The soybean chart looks much better, Brian. We're up into some multi-week highs. We're above the 200-day moving average for the first time since early February. What say you?
So there's, I think, two very positive things going on, maybe three. Number one, it all really started at the beginning of the month of April. We were trading below the March monthly lows. Then mid-month, we took out the March monthly highs. So we're late in the month. We haven't sealed it yet, but we do have an outside monthly reversal higher in soybeans, right? So number two, we are through that 200-day moving average. We have closed above it before. We did it actually back in January, one day, and then the very next day we closed back below it, and then it was resistance ever since. So looks like we're primed to get some consecutive closes over the 200-day moving average, which is that blue line.
Hey, don't jinx it. Don't jinx it, buddy.
Sorry. And then number three, just the fact that we were able to get through the 1050 level and make some new highs for the move, I think looks positive as well.
Hey, I have a dumb non-charter person question. 200-day moving average is something everybody watches, right? When you do it like on a daily chart like this, do you use the daily chart like I did, or would you rather use like a daily continuation chart, given that it's such a long time frame?
I typically just use my primary thought process is the front month contract as far as volume and open interest. What is that one doing relative to its 200-day?
Okay, so you look at just the July contract in a vacuum in this instance, the way I did it.
Correct.
Okay, I'm not that dumb. See, okay, here's a corn chart. Tell me what you see here very quickly.
So there's an uptrend, and it's a pretty steep uptrend, but it's from those secondary March lows to then that little early April low. Yeah, I think it was April 3rd. So we got very close to that uptrend on this little pullback that we had. You're going to see some short-term resistance at last week's lows, which is right up against where it seems like we've made some highs here so far. But the fact that we were able to recover back over those March highs after closing below it for a day looked positive. Again, the uptrend where we made lows on Wednesday was right above that uptrend line. So it looks good. I think when I would be looking at the July chart big picture, which I think you have to look at the last year plus of the contract, it looks like a big head and shoulder bottom to me, but 520 is going to be really critical. If we ever push through these highs that were made in February, which line up with the highs that were made in May of 2024, I think that you can see a pretty explosive breakout to the upside.
I'm told from a fundamental standpoint that farmer selling has grinded to a halt, and that has helped to improve not only futures but also basis, which would be pretty normal for this time of year, right?
It is. And so when I think about it from a perspective of a producer, they've seen these prices before, right? We've seen 480, we've seen 490, we've seen 520 for July corn. So I think the producer that is holding bushels right now is holding them to see what type of weather market we can get into in the next 2 to 3 months. And their intention likely would be to market the remaining old crop bushels during that time frame.
We're not going to do a week chart today because it's Friday, and I don't want to ruin your weekends, guys. So we'll just skip to the next story. How about that?
China made its largest cancellation of U.S. pork purchases last week since 2020, when it canceled 20,000 metric tons of pork, bringing net sales for the week down to 5,800 metric tons, a marketing year low. U.S. pork exports to China were already facing challenges prior to President Trump's trade war. Before April 2nd, also known as Liberation Day, the tariff rate on pork exports stood at 47% due to carryover tariffs from Trump's first trade war. Following China's latest retaliatory action, that rate has surged to 172%. There are also concerns that U.S. beef exports to China may be adversely affected, with tariffs on beef now reaching 147%.
I don't know a damn thing about pork or the hog market for that matter, but this doesn't look good. But at the same time, you had the earlier headline that could render this kind of a non-event. I don't know.
It's hard because I don't know when these purchases were made. And then you look at how the market reacted after, early part of March, then again, early part of April after Liberation Day. So we've seen China play games before where they've canceled purchases made at certain prices, and then the market breaks, and then they do the same purchase all over again at a lower level. They could have very well done that. We've seen a tremendous recovery in the hog market from earlier part of the month, but China also does buy a lot of US beef, so I think that is definitely a viable concern. But as of right now, the beef market has been super duper strong. This live cattle has been just a rocket ship to the upside here.
Let's go to Brazil.
So a surge in Brazilian ethanol production could reduce the volume of corn available on the global market. Corn-based ethanol output in Brazil is projected to reach 8.25 billion liters this season, up sharply from just 140 million a decade ago. Production is forecast to expand to 10 billion liters next season, accounting for roughly 1/3 of the nation's total ethanol output. The remaining 2/3 will come from sugarcane-based ethanol. Brazil currently operates 25 corn ethanol plants, with an additional 15 under construction. Rising domestic demand for corn is expected to reduce Brazil's export volumes in the coming years. The shift could ease competition for U.S. corn in global markets and push global prices higher.
When it comes to demand for Brazilian corn, the food seed industrial sector, which includes ethanol, is less than 18%, where here in the United States, it's 37% or something like that. They've probably got room to expand that number, which could possibly reduce the export number, which could be helpful to the United States. They do have sugar ethanol, which is 2/3 of output, but they're talking a pretty substantial increase in production capacity here. They've got 25 plants now. They're going to do another 15. This is potentially impactful.
Yeah, I would say this is impactful, and it's not just corn. I mean, we're seeing domestic demand in Brazil for soybeans growing as well. So between the two, it does seem like Brazil is using more of their domestically grown product, which will take some of that out for export. But I think that when you look at like you had mentioned, their industries in general, there's a lot of room for growth in their domestic consumption of their product. We'll see how that pans out over the next couple of years, but I would suspect that you're going to see Brazil's crush industry for soybeans expand further, and you're going to continue to see the build out of the ethanol industry.
And the Brazilian corn situation, as it stands today, is very tight. We haven't gotten into that second corn harvest yet. USDA projects their stocks to use ratio, implied stocks to use ratio, at like 2%, meaning that for every 100 bushels that they have used, they're going to have 2 bushels left over. It's like almost a non-existent ending stock situation in Brazil. They don't do storage the way that we do, but maybe the South America or Brazil corn thing is, I know we've been told this is going to be big competition and they're selling corn to China. Maybe it's not as bad as we think.
Stocks were higher for a third consecutive session on Thursday. The S&P 500 gained 2%, the Nasdaq increased 2.7%, and the Dow Jones climbed 1.2%. This week's rally has been largely fueled by President Trump's softening tone on trade, including his announcement that trade discussions with Beijing were ongoing. Early on Thursday, however, China refuted that claim, stating that no trade negotiations have taken place. Markets also found support in Trump's reassurance that he does not intend to remove Fed Chair Jerome Powell. Despite this week's rebound, stocks remained down since April 2nd, when Trump introduced his new tariff policy. The S&P 500 has fallen 3.3%, the Dow has slid by 5.1%, and the Nasdaq has declined by 2.5%.
Interestingly, the stock market is a little bit lower this morning, despite the headlines out of China, which again leads me to the conclusion that maybe somebody knew about the exemptions yesterday. But this S&P chart is a thing of beauty. That trend line held almost perfectly, and we've rallied back 14% from the low that was posted on April 7th. Just tremendous volatility.
Right. So that COVID low to that the 2022 high, that 2022 bear market low was a 50% retracement of that initial rally. So then we have that 2022 bear market low to the current high, record high for the equities. And this pullback that we've seen here to that trend line was also a 50% retracement. So the market is moving similarly. This is that they came in and bought the S&P right where they should have. And you'll also notice that 2022 bear market low was a retest of that 2019 record high at the time. This low that we just made was a retest of that 2022, or I should say 2021 record high that was made at that time. So the market is behaving very similarly to the previous setback. A 50% correction of a major run hitting the uptrend. The S&P was bought right where it needed to be to hold things together. So yes, I think all things being equal, if we just ignore everything that's going on around us and look at this chart, it would suggest that we've found a very good base of support. We're likely to come back down and maybe revisit some of the lower portions of this bar over the next couple months, maybe revisit 5,000. I don't see why with the volatility that would be an unlikely event, but big picture, that 4,800 area should be very good support. And I would imagine that we'll be trading back to 6,000 plus, within the next year or two.
People love to cheer the stock market lower for some odd reason. I don't understand why, but it seems like people are always kind of like want to be bearish. I think people would be furious if we traded back to all-time highs in the next, call it 3 months.
Yeah, there's a lot of talk about how the CTAs, are potentially going to get squeezed. And I don't know if they were really shorting the equity trade in the whole here when it was down substantially, and if they're behind on that. But you could very easily see a short squeeze here, where a lot of those sellers that came in, mid move while everyone was concerned about tariffs and trade policies, underwater on their sales. So we could very easily see a short squeeze. And this is a market that is rigged to go higher long term, right? There's always new money coming into it every month. You have people that have their set asides. The market goes into funds for, their company sets it and puts it into mutual funds or wherever it goes. I know every single year I got to put money in my SEP IRA or I'm going to pay even more taxes, right? So this is a market that is meant to perpetually have new money coming into it all the time.
Serves those CTAs right for betting against the United States.
That's right. That's
what
what
are you
you get,
thinking,
guys?
What are you thinking, bros? All right, what's next?
USDA released weekly drought monitor data yesterday. A significant portion of the Corn Belt experienced rainfall last week, leading to improved drought conditions across Missouri and Iowa. Additionally, moderate improvements were observed in western Illinois, as well as from southeastern Minnesota into northern Wisconsin. Precipitation was scattered across the high plains. Drought conditions were mostly unchanged throughout the region, with the exception of slight improvements in south central and northwest Kansas, as well as in north central Oklahoma. When we look at the percentage of U.S. areas experiencing drought, corn country, 26%, soybeans, 21%, winter wheat, 33%, spring wheat, 49%, and cattle country, 37%.
Kind of the same story. You've got some droughtish type stuff in the Western Corn Belt and certainly in the plains from north to south. It's kind of the same story that's been for a while, Brian.
Right. From the perspective of looking at what we're concerned about moving into summer weather, continues to be that region when you look at Texas across the border into Mexico, how dry that area is. And then what I've been told is really important to watch as we move forward into May and June is the water temperatures in the Pacific. And if the water temperatures in the Pacific, so you're talking like off the coast of California, Baja, Mexico, that area, if that continues to trend colder and we get cold in that water, then that generally will push the dome of heat during the growing season over the Midwest. So that's really kind of the two things that we're watching from the weather front is how that drought in Southwest Texas evolves and then the water temperatures in the Pacific.
We do have some activity on the radar here this morning, some scattered stuff over parts of Iowa, over parts of Nebraska and Kansas and Oklahoma and parts of the Mid-South. Next 5 days, more kind of spotty stuff. There's definitely going to be some more planting activity in some areas. The 5 to 10 day period introduces some greater rainfall for a lot of the central and eastern Corn Belt. What are you being told about planting progress?
I think the guys up north in Minnesota have had a little bit of problems getting in there, so we're going to see some delays there. I've got producers in Missouri that have been planted. They had a lot of rain that came through. There was that period where they had 12, 13, 14 inches of rain. So that has subsided. It's dried up. That looks better. I know you've got producers in Matt's area that have been going here recently. So I think in general, I don't know that there's much of a broad concern for planting progress at this point.
Yeah, no, I don't think so either. I think that's part of the reason that you saw some corn selling recently. You saw a bounce here the last couple of days, but progress is pretty good. Let's go to export sales.
U.S. corn export sales declined last week. Net corn sales were reported at 45 million bushels. The print was down 26% compared to the previous week, but up 1% from the prior 4-week average. Japan was the largest buyer for the week. Net soybean sales were near the lower end of pre-report expectations at 10 million bushels. The print was down 50% from the previous week and 25% from the prior 4-week average. Mexico was the largest buyer. Net wheat sales reductions of 5 million bushels were also near the lower end of expectations. The print was down substantially from the previous week and from the prior 4-week average. Vietnam was the largest wheat buyer for the week.
The wheat cancellations are not good. The new crop wheat sales were only 372, which is really not great either. Yet I'm told that we're fairly competitive versus Russia and elsewhere.
Right. So I think as of late, we've had both Russian and French wheat price themselves out of competition. So that makes us look a lot more attractive. I do think a lot of the pressure that we've seen in wheat recently has been led by the hard red wheat, the improvement in conditions there.
Yeah.
We just saw the map that has even more rain going in some hard red regions. I think it's interesting. A lot of the thought for me, over the last couple of years has been kind of, when does China do their buying program? And when does that program kick in for soybeans? And now it's interesting where you're seeing kind of like Mexico is buying beans in the time of year when we don't see a lot of bean sales, right? And then they bought a lot of corn earlier in the year. So now my brain's starting to think about like, what is the Mexican buying program? Are we going to see a lot of buying of corn as we get into, let's say, late summer through harvest, and then they're going to start looking at buying soybeans as we get into spring, into early part of summer? Is that their new pattern of buying? But they've just turned into a pretty tremendous buyer of corn product, and a lot of that was drawn out by the drought that they've had there over the last year plus. But just pretty interesting to see, number one soybean buyer is Mexico. And I like the fact that Japan's back in here for corn. They used to be a pretty big buyer of corn. So I like when Japan's the lead buyer if it's not Mexico.
Yeah. Mackenzie, quick cattle market update.
Cattle futures were higher. Live cattle were 22 cents to 80 cents higher yesterday, with the exception of the June 25 contract that lost 10 cents. Feeders saw gains ranging from 40 cents to 72 cents. Box beef prices were also higher. Choice was up $1.73 at $333.70, and Select was up $1.83 at $316.35.
Are you a cattle bull, Brian?
I mean, we just made new contract highs. So the long-term uptrends are still intact. It's hard to say something bearish about something that's making new highs. I think there's always some downside risk when you're at new highs, but this June contract, when I think about where the April contract kind of pulled back to before this run to new highs, I think you're going to see June then support in that same vicinity. So maybe the upper 190s, 198, 199 is going to be where they come back and buy June on another correction if we get that. But I think June will probably come in here and make some new highs as we get the April contract to leave the board. And again, we're trading up at 112, 113 plus. So the June contract is going to look a little cheap compared to where April's leaving the board.
Outside markets on Friday, Dow Jones is down 200, the S&P is down 16, and that's despite the headlines out of China. Bonds are up a little bit, U.S. dollars a little bit higher. Crude oil is down 67 cents in the June WTI at 62.13. Gold's down $38 this morning, more volatility there. Brian, thanks for joining us. Have a great weekend, guys. We'll be back on Monday.